Welcome, invested students, to another episode of the Invested Teacher Podcast. And you know what, my friends, this week we're excited to dig into a bit of a review of what the heck's been going on in our world here with all kinds of deals. I mean, heck, we know that Matt's up to his ears in deals. He's once again running around town, making offers and, doing offer presentations and all that wonderful jazz. So he sends his regards. But also on our end, the invested teachers have actually been pretty active. And we thought it might be helpful to give you a little bit of a bird's eye view as to sort of what's been going on, maybe talking about some of the properties and some of the deals that we had mentioned from, a couple months back, as well as some of the other properties that we've viewed. Some of them, we actually, got some free things. You'll hear about the free things that we got at some of the properties that we visited, and talking about some of the current deals that are floating in the air and, we're hoping to bring together in order to close on a couple different deals.
Yeah, I think it's going to be helpful, being a listener and kind of hearing what we're, thinking about, what we're dealing with, how we go about thinking about some of the options that we have, about, what does it look like when we are dealing with a deal and a live deal and a property and we're managing those properties or having a manager manage those properties. That's what we want to do. We want to give an update on some of those deals that's been going on for, the last 6 months, and kind of just run through, what we've been thinking about. So, Kyle, where do you want to start? What's on your, let's start with most top of mind. What do you think is what do you feel like right now is something that was you just dealt with this, and let's riff on it. Let's chat about that thing for our listeners here.
Yeah, well, I mean, the thing that I think has been most top of mind for me, probably consistently and for the longest period of time, this is going on 5 or 6 years now, is the idea of insurance policies, in particular par whole life policies. And, as you friends know, I went down the rabbit hole many years ago, really trying to uncover. At first, it was all about infinite banking, and some call it bank on yourself. We even had an episode where we discussed some of the benefits for the average person and why that's a strategy that I think everyone needs to at least explore in order to figure out how they can benefit from it. But for those who are actually doing some investing or owning businesses, in particular, those who have corporate structures like us, like the invested teachers, we have corporate structures in place, not only for our real estate, but, you and I for our math business, but also, Matt for his real estate business. They call it a PREC. And ultimately, what I've been learning, not through the course and not through even the books that I've read, but through the networking that I've done, and I've actually landed on what I believe is the dream team for me to dig in, because I've been on this search to try to find people who are, I guess, as obsessed with designing these policies in such a way that it's going to give maximum benefit to the end user, to the actual policy owner. And I thought I had it all figured out, right? I had this strategy. We had been employing this strategy ourselves, and it's still a great strategy. But then entered a company that we sort of ran into and went down the rabbit hole with them. And they've got such a unique way to help specifically, as I mentioned, people with corporations and, this tax minimization strategy. I've been going up and down this thing with a fine tooth comb. And I said, on that day, I was I need to become a member of your team. And I'm hoping to have some announcements related to that in the very near future. So if you're listening and you're an invested student here and you have a corporate structure of any type, be it, property holdings, whether it's in business, whatever you're doing, you definitely need to get in touch with me, because holy smokes, such a mind-blowing approach. And right now that's on my mind, because I'm looking to take care of us with this structure. And I'm still doing a ton of digging and a ton of learning just to make sure that I know this thing inside and out, as well as I know participating whole life policies in general.
Kyle, you said it's mind blowing, but like, what would you say is the biggest benefit to a person who does have a corporation for the strategy that you're thinking about, you're exploring?
Well, let's just put it this way. I thought the best I could do, which was amazing, by the way, I thought the best I could do was to set it up in such a way that upon my death, that the value that I accumulated inside my corporation would be able to go mostly tax-free to my heirs. And that, like, even for those who are listening are probably like, well, that's pretty phenomenal. Like, you're kind of turning your entire corporation into almost like a tax-free savings account, right? Which is like fantastic. The one caveat is I have to be dead for that to actually happen,
right?
You know? So a little bit of a pain in the butt, but still better than, say, pulling money out and having to pay tax on it. Well, all I can say at this point is that this strategy is even better and it's 100% compliant, but I would argue that like 99.9% of people are unaware of it, in particular business owners. So that's all I can say on it at this time. But for those who are interested, definitely hit that investedteacher.com website and hit the contact button, reach out, and let's get on a call and see if it's a good fit for you.
All right. Let's that's a good update. I know that's been weighing on you. Your fact finder has been going overtime on
like what's on your mind, because I know you're not as geeked into whole life. You just trust me with that judgment and all that.
Your
guidance.
fact finding job is to figure those things out. What's on my mind? I guess most recently, I've been thinking about our property that we had our private deal. So we did talk about this particular deal on the podcast prior. So we wanted to give you an update here, just to give you a quick background if you didn't listen to those previous episodes or haven't followed along. But also, it's been a while since we've chatted about this particular deal. We originally had an opportunity to give private money to a contractor who was then going to flip the property and then sell the property, and we would get that private money interest rate back. We restructured it to be a little bit more safer for us. We put ourselves on title. And remember that, Kyle, our plan A was to get our interest money on the flip. Plan B was if everything goes south, and this contractor could not live up to his end of the deal, which means get the property flipped and sold by a certain date.
Do what they said they would do.
Then our plan B was, because we restructured it, and this contractor was okay with this restructuring, that we would be on title. Then it's our property. We bought it, and then had him doing the flip, that we would basically lock him out and change the locks. And unfortunately, Plan B did happen. So where are we now? Because Plan A was supposed to be done and complete, probably almost over just under a year ago.
We should have had this property, I think, going on the market.
It was November, I think.
A month or two from now, because the closing was in August of 2022.
Yeah, I thought we had 3 months. I think was the original deal, was 3 months, and I think it was like putting us November into December, and then 6 months I think came along, and that's when we, I think, locked the keys, changed the locks. So we went in with a new contractor, fabulous new contract, like not a new contract, like new to us.
Shout out JM Solutions.
Yeah, Jay went in there and went to town. And I think, Kyle, the update we're at right now is Jay did a phenomenal job flipping that house and keeping our costs low, because now we are incurring all the costs of the flip. So, original deal was we wanted just really the interest on the private loan. And that was the way we had pretty much structured it. Now since we own the property, we owned a property that, having why I think this contractor walked away or wasn't going to continue the work was the value of the property, isn't, he's going to be underwater at the sale anyway. So I think that's why he basically said, I'm not really going to do any work here. And basically he walked away before we changed the locks, in my opinion. And then, so now we own a property that's kind of underwater. We can't really sell it for what we paid for it and that kind of thing. So we basically, we're trying to do one of these. Let's improve the property. Let's force appreciation. So we dumped, some money in there. We changed, redid the kitchen, we redid the flooring, we did everything from the studs got changed, and it looks phenomenal. I think I saw some pictures just the other day because Jay was sharing them with us. We got our realtor, Matt is going in. Matt went in today, took pictures of the property, going to be listing it. So that's an update. Like we are at this, at this point where, almost a year later, we are going to try to list it to break even, I think, right, Kyle? We're trying to do like a break even kind of deal here and see where we are, like see where the market is, because we did have to invest extra money into it to bring the property, to appreciate the property. But because of the market, we're trying to now think of plan C. And I think we always had plan C in the back anyway, as whether we sell it or whether we rent it.
Exactly. And, I think we should just nickname the property the Chameleon, because it just it just changes, from month to month. And
looks like
ultimately
the
plan C, I think right from the get-go. So we knew, at the very beginning with plan A, we felt that, the property was, that they overpaid, that this particular contractor overpaid. He instilled trust that, I would argue, was not disingenuine, and it wasn't real. And you live and you learn. However, thank goodness that we did do what we did, because otherwise we'd be trying to, sue. And we know what that's like, right? Trying to sue somebody without money. It's like, yay, great, you won, but there's no money there to pay out. So for us, I think in the back of our minds, we've been looking at plan C as sort of a longer term strategy. So it's tying up some of our capital that we would have never intended to maybe land there or put there temporarily. But ultimately, we're at a place where, hey, we could be cash flow neutral here and just hang on to what is now a super solid property. So it's a single family home. It's in a nice neighborhood. It's actually, just on the edge of one of the, we'll call it one of the more sought out after schools in the school district. So if they're a street over, they're in a different school, and, people are all, for whatever reason, really liking the one school on that side of the street. So you know what, at the end of the day, it's like, hey, it's as much of a pain in the butt as that's been. Great learning experience. It also, again, just kind of raises that flag for you if you are doing direct private lending, to make sure that you're protecting yourself, or that you at least know the risks in what you're getting yourself into. If you're going through a fund where, it's a pool of private money, that definitely is a safer option, based on the track record of the company that's doing this work. However, it's still worth noting that if the company does over leverage themselves, if they overextend, if they get too lenient on their underwriting, like, things can happen. So you just have to be aware. You just have to be cautious of that. You just have to know what's possible. So I think what we should do is, on the show notes page, we should definitely put a couple pics up. Yeah. We'll also get a link to Jay's website, because Jay's amazing. If you're in Windsor, Essex area, I'll tell you, he not only is he a great friend, and but this is just how he does business. Like, he is so passionate about the work he does. He, sometimes we have to say, okay, Jay, like, it doesn't need to be that nice, because he really takes pride in his work, and it's really turned out really, really well. So that's a deal that pretty soon I think is going to be maybe in the back of our minds. So we'll see. Hey, the market in the more entry level homes area is still pretty active right now. So you just never know, right? We've got got an amazing discount on some granite countertops for the kitchen. Like, we've really put a lot of love into this thing, because, again, in our minds, we were thinking, hey, you know what? We might be hanging on to this thing for a longer term. Let's make sure we can put the best tenants that we can in there, in order to not only preserve the property, right? Keep it in good condition and take care of it, pride of ownership, but also to, potentially sell it and see if, maybe there's the right buyer out there. So that one hopefully will go to the back of our minds. let's talk about some of the shopping that we did over the past couple. Why don't we start with the most, I'm going to call it the most unique of these shopping experiences that we had.
Yeah. This is, I can't remember. I think Matt had a seller and he was looking to sell this, and Matt was like, you know what, you guys got to meet me down by the harbor. And we're like, okay.
It's like Kyle loves waterfront property, so I'm like, I'm in. Let's
all right. Go. So we met Matt down by the harbor, and we get out on the dock at the harbor, and he's like, there it is. There they are. And we're like, what are we looking at here? And he's like, these 3 houseboats. And we're like, houseboats? What do you mean? And so this particular deal, the owners of the houseboats is a business, like an Airbnb style business cool. Where, it was really unique, really unique. So they were selling 3 houseboats that were at the dock, and you can rent, by the one night, I think they had like a 2-night minimum. And you could stay on the houseboat. You had like a nice little kitchen inside. And they were really nice inside. They were like done well. It's kind of like, it could be like a little party boat. But you don't take these boats out. They're not like they're in the water, but it's not like you drive them out and have a party on the boat. They're like a hotel room on the water. And so we looked at those. We looked at, we did some analyzing on the numbers, and I think it was a very unique opportunity, and I think we were really leaning towards it until we started to play with the numbers, and we're like, the numbers have to work. So let's look at the numbers, and even though we're like, we could be boat owners, totally. we could be owners of like, Airbnb short-term rental. But the numbers didn't work, right? Like we looked at some of the rents. We looked at what, we'd have to buy them for and what the upkeeps would be. We did our due diligence. And it was pretty quickly, I think we realized that it wasn't going to be a cash flowing business the way it made it look like it was.
Right. And I think, and who knows, that was a few months back now. So who knows, maybe the sellers have softened.
Maybe.
But I think also through that experience, and, I'll share, they're called the Vintage Grapes. So there's actually a website. You can go check them out. You can book them. I actually was going to book a night with my wife in the summer while kids were at camp. I was going to do that, and we ended up doing something else, so I didn't get a chance to. But they're super slick. Like, they are so cool. And it's like when you're there, I got to say, it's like the feeling I got was like how, like almost like, again, it's like ego maybe getting in the way where you're like, how cool would it be to like say that you own these, like, this houseboat business,
That's not a great reason to own a business.
I know. And that's the problem. And I guess that's what I want everyone listening to kind of like be aware of, is like when you get that feeling sometimes can trick you into thinking like it's the right move, or it's like almost like it's almost like your irrational
It's exciting,
brain,
right? It's exciting to like
your irrational brain
new.
Starts saying like, things to you like maybe the universe wants this for you, like, like whatever you want to tell yourself, the story you're trying to tell yourself. And, even if, like, here's the crazy part. So the numbers didn't work. We didn't push on it, right? Because we're not it was just
the
short-term
first
rental
blush
business.
Numbers didn't work.
Yeah, we're like, listen, if there was like a fire sale and like it was very almost like, a deal you couldn't refuse type thing, we'd be all over it, of course. That's, stupid us. We do that on, flips that we know we shouldn't be doing, right? But if it's a good enough deal, we'll do it. Here, that wasn't the case, but maybe for the right person who knows, maybe can see where they can put a little bit of like, sweat equity into it and maybe up some of the, the daily rates or whatever, who knows, it might be the right fit. But more and more, like, as we not only ran the numbers, so thankfully the numbers didn't work for us. Like, it didn't yell out to us as like great deal. But even if it did, like, the one thing that we started talking to ourselves about too was like, there is a cost to the amount of hassle that would potentially introduce into our lives, right? Like that's like a business, like that's like a new business. Well, like rental properties is a business too, but this is short-term rentals. There's like, who knows, like what else you'd have to learn about, like the insurance, being that these are boats, even though they're not driving the boats, like it's
a risk.
There is a lot going on there. And I think for the reason we wanted to share this experience with everyone listening is because you've got to always like pause and think to yourself, what is it that you want to do? Not just for the monetary benefit or the wealth benefit, but also, is it going to suit your lifestyle? Because that would be a much more hands-on experience unless you've accounted for whoever you're going to hire on, which again is another expense. It's beyond what you're going to pay a property manager for a long-term rental, right? Because these are short-term turnovers. So those were some of the things too floating in our mind. We're like, is the upside really there for us?
It reminds me of a episode I was listening to, Alex Hermosi, and he was talking about this idea of risk. And you recently listened to it as well. Like he was talking about like, if you had an extra $100,000, what should you do with it? And I think Alex's story was he was talking with, Grant Cardone, who if you've, listened to or you're in investing, you might know who Grant Cardone is. Grant Cardone's like, you should buy the biggest building you could find. Like, cause Grant made, a ton of money in real estate. And he's like, you got to go all in on real estate. Whereas Alex Hermosi, if you know Alex Hermosi, he is an investor and builder of businesses. And so Alex is like, that sounds so risky to put money in real estate. He's like, I'd rather put my $100,000 into buying a business because I know that business. Like I know I can make that be successful. That is no risk on my end if I go that route. Whereas Grant Cardone's going, there's no risk on my end if I buy the real estate. Like both of them have total different perspectives just because of their skill sets. So for example, if we're going to buy boats, it's kind of like, well, we've only been buying real estate and long-term rentals. We don't have a lot of short-term rentals. I know Matt's got a short-term rental, but we don't have a lot of short-term rentals. So it's kind of like, if we go down that, let alone buying a boat that has to sit at a harbor, and what happens if the harbor changes rules about what boats are allowed to sit there? What do you do in the wintertime? What happens if the boats break down? Like a boat is a depreciating asset.
Whatever that word
it's
is.
not a home.
Sure.
It's not going to appreciate in value, right? So it's like, wait a minute. I think this is out of our wheelhouse. It's riskier to go down that route, just like it's risky for Alex Hermosi to buy real estate. It's like that part, plus some of the numbers, we're like, that's it. That's not for us.
Totally.
And that's where we landed with the houseboats, even though it would have been cool to own a houseboat.
It totally would. Yeah, exactly. And I think, we basically came to the conclusion that was in the too hard, bin for us. Not meaning like, hey, if things significantly change, we're not saying that, hey, a couple episodes from now, we might be like, guess who owns houseboats? Like that's like totally who we are. But we would want to make sure that there's a big enough margin of safety. And that margin of safety has to be bigger on an asset or an asset type or class that maybe you don't know as well. So Grant Cardone might be able to go in there and be like, hey, I've got like a 10% margin of safety, whereas Alex Hormozy might need a 40% margin of safety to feel comfortable going in, even though they both are worth hundreds of millions of dollars, both of these guys, right? So I think it's just a reminder that it doesn't matter how many investments you have, how long you've been doing it, or how new you are. It's still easy to find yourself sort of down a rabbit hole and kind of like, wondering whether something like maybe the opportunity, like maybe there's an opportunity here, an opportunity there, but you really do have to like pause and sort of, get back to that higher level and kind of look around and go, okay, is this really as good an idea as we think it is right now? Because again, that excitement sometimes can take over. And, when after we visited those boats, we went on, I think we had talked about on a previous episode how we had an 8-unit multi-use building under contract. We came up on the original price that, was higher than we wanted, but then had it conditional on inspection. After inspection, there was lots to do, like a lot of things to do.
We talked about that on an episode, yeah.
Yeah, so we wanted to come back. We did come back. They didn't, we couldn't come to terms, so we walked from that deal. Well, recently, that agent came back to us and said, hey, seller has come down to this point, and I'm going to say that we're still off by about, I think it was about $50,000. Not the end of the world, but that was still still significant enough for us where we thought, you know what, we're just going to wait and we're just going to see. And who knows, maybe there will be an opportunity for us to come back to the table, at some point down the road.
The interesting thing about this property that we looked at, I think I think we did a whole episode on this particular property and doing our walkthrough and the inspection, is that not long after we did our inspection and we put our offer in at about what the roof was going to cost us, less than what the offer, what the original offer was. So we came back saying, hey, we want to adjust. This is the new offer based off what we're seeing on the inspection. And they let that fall, right? Like they just didn't come back and say anything because they knew that, that wasn't something that they wanted to do. But not long, this is the interesting thing, Kyle, is I was curious about the mindset and really the implications. Not long after that, we saw it was listed and a price reduction. So where I was wondering was in this particular property is that now you've reduced the price by, I don't know, it was reduced the price by a little bit, but you now have a report, like we have this inspection on file that says, you need to put in $90K for the roof and all the other things. And now you're reducing your price. So now think of the next buyer going into this to look at this. They're going to go in and they're going to look at it. Okay, well, I'm okay maybe with paying this new price because they see the new price. It's lower than what we were going to pay, what we were thinking about initially. And then they do their inspection and it's bound to come up with, hey, you're going to need $90K for the roof and other things. So now my the thinking is that person, if they were like us, they'd be like, well, we're going to offer $90K less than that. So now just because you reduced your price, I feel like they're asking for all other offers to be lower than our offer. Because because they lowered their price after, you didn't eliminate the issue. The issues are still there. They're not gone. They still have to be addressed.
It's not like you're stamping it on the photos. Like, by the way, arrow pointing to roof, you're going to need to add blank for this. It's not. They're not being that open now. If they ask, they're going to be honest about it because it's a material fact. Now it's a material fact, so they have to do it. But they're not gonna, put that right in the MLS listing. Like, hey, by the way, need a,
budget $90K for the roof. Yeah, I think that's where now I think if they had come down, we would have been like, all right, we'll pay $90K less and get the roof done. Like we were ready to do that. We were ready to jump on it, and I think we saw a lot of potential there. But I'm curious where this one's going to go because I don't think it's done. I don't think this building is not sold. It's still there.
It's still there, and we know what they bought it for. A few years back, so they had bought it. Probably at a bad time. We'll argue. Based on where the market was heading, and then now it's kind of softened a bit. So it'll be interesting to see. But and we try to be very honest, with people and just say here's where it's at, and we're not trying to play games. We're just. This is what it's got to be, and we totally get it if that's not going to work, unless we want to get more creative in another way, and they seem a little bit pressed to do that. So, so we continue to shop, we continue to look around, and again, we can't speak about all the properties we look at. So first of all, let's just go and mention that we analyze
how many
numbers on a lot of properties. Pretty much every property that goes up comes in, unless it's the number is just, I can tell just by the price per unit that I'm there's going to be no way that's going to be able to cash flow. So I might let some of those slide, but a lot of them I do ask Bigly right away, flip me the numbers. I'll run the numbers. If there's anything that's even potentially, interesting, then we'll start to dig and start to ask questions. But we actually don't go to look at the property right away because that takes a lot of time and effort if you don't have any sort of context. So right away, we're asking about VTBs. We're asking about, Matt's pulling when they bought the property, what they bought it for. So that can give you a, kind of insight. Like if they bought it 15 years ago, then it's if they didn't refinance it, then they might have a lot of equity in there, and that could be like a good indicator that a VTB might be an opportunity or an option. Oftentimes agents don't even know what that means. They say, like, what is that? And I mean, that's, I guess, a bit shocking to me, but I guess not. That, there's a lot of agents out there that actually aren't investors, which I guess is also shocking to me, but I guess not. That, they're selling all of these homes and they see properties going up, but yet they're not participating in the market. But yeah, those are our first things we do. And I would argue, we're analyzing at least, I mean, visually we're analyzing every property that goes onto the market, but then running numbers on 5 to 10 a week, right? Just to kind of see where we're at and make sure that we know what's going on in the marketplace.
Yeah, like those you put the alerts, right? The alerts just pop in. Hey, new multifamily up. Let's look at it, because I think I know I have the alerts on multifamily. You have just alerts on multifamily or single family? Just multifamily, probably, right?
Just multi and water.
And water, right.
I love seeing what's coming up on the water, and if there's creative opportunities there as well. But now, looking at wholesaling is a much, I would argue, like a much better place to be if you can get on some wholesaling lists. So we're on many of those, and that actually brought the attention, or brought a home to our attention in a nice neighborhood on a nice street in Windsor. It's a 2-bedroom, 1-bath, all brick. And I was like, hey, let's go out. So we, I called Jay, and me and Jay head on over there. The price looks okay. We go in. We're like, hey, it doesn't need like a ton of love. It's going to need a facelift. I approximated maybe 50, 60K. It's like, okay, this could be great. And, we're looking, 2-bedroom, 1-bath is pretty tight. So again, it's like, would have rather had like a 3-1, 3-2 if possible, but whatever, we'll live. And there's a basement. And they're like, well, listen, in the basement, you can go down there. But like, 2 weeks ago, they had it sprayed a second time for bugs, for some type of bug or whatever. I was like, oh, okay. Like, so it's okay? And they're like, yeah, it's fine. Like, you go down there. So me and Jay go down there, and, we're looking around. Jay's looking, in the corners, and he's noticing some wet spots and things. So we're starting to go, okay, like, foundation might be a little iffy here. Like, there could be more, here than this 50, 60K we're thinking. So we're starting to kind of go, okay, whatever, and start looking at the panel and all these things. And all of a sudden I'm just standing there. I'm just like what? Like, what's touching my legs? Like, I was like, what is going on?
Moving around?
It was weird. It was kind of like, almost like...
You got a cat down there?
I was going to say, like, like when a cat kind of brushes against your, like, the hairs of your leg a little bit, but, like, doesn't, like, fully do it. It's just a little bit. And I look down, and I'm like, there's bugs jumping on me, like, all over my legs. And I was like, oh, my God. I'm like, there's, like, look at these bugs. And, like, Jay's like, lice. He's yelling lice. I'm like, I don't think that's how lice works. But anyway... We run up the stairs. We're like itching ourselves. We're like, what is going on here? And they're like, oh, shoot, the bugs must not be done yet.
Oh my God.
Must have been fleas. Like, we looked it up. I'm like, there was fleas all over. We're taking sanitizer and just like lathering it all over our legs and all over. Like, it was like, now it's in our head, like in our minds, that they're all over you, right? Like, we're itchy everywhere. And we're like, oh my God, we stayed for an extra hour just trying to make sure, taking our shirts off and everything.
Was it a deal breaker?
It was a deal breaker for us. And, we just saw, like it was just mind blowing to me, but I'm like, I thought it was worth telling everyone, because guess what? It's not all fun when you're doing this stuff. It's not all, and it's like, make sure probably wearing pants next time is a better idea. I'm always wearing shorts. Bad move in that case. That's the first time I've had this issue, but you're going to see some really interesting things, especially if you're finding properties that you are looking to add some value to, and you're not just taking and sort of, buying as a turnkey sort of operation.
Yeah, that reminds me of a story Matt told us, which is, again, an update, still an update for a story that he ended up owning a property. He's got a client that, I think, jumps into deals.
Trigger happy?
Yeah, is like, I'm gonna get that. I'm like that. That's a no brainer. The price there, nothing. It's like sight unseen, put money down. And I think in this particular one, he bought it, and then he's like, Matt, I just bought you a property. And Matt's like, what do you mean you just bought me a property? He's like, this one, I'm going to assign it to you. And then I think Matt said, okay. And so I think they're going to do a flip on it, something like that. And they go to check out the property, and they pull up, and I think it was like one person, two people come out right away and start yelling at them. They're like, get out of here, get out. And then like Matt left. He's like, what's going on? Find out there's like a Hell's Angel biker living in there. Yeah. And they can't get rid of him. And they're like, I don't know. I forget how he got rid of him, but it was like the guy wouldn't leave. It's like Matt owns this house. And he bought it sight unseen. And the person who sold it to him failed to tell everybody that I think it was her father was still living in the house. Yeah. And he didn't leave. And it was totally. Like, how do we get this guy out of here? It's like another one of those, like, hey, you're gonna run into some crazy crap, looking at especially jumping in without doing some of the due diligence you need to do.
Well, ironically, that property is where Jay and I went. We were supposed to go see that property because Jay was going to do the work at that place. So that was a couple weeks after. So, they had vacated. But, when we checked out this garage and the bolt and the locks on this garage, and in the garage, it was like no windows. We're like, oh man. And there was multiple gas lines and stuff. Like there was like something, there was stuff going on in here. Yeah. Like, I don't know, but I was like, man, there's a lot. And then like the chain and the lock in the basement around the pole, we were like, oh God, like
that's like something out of Breaking Bad.
It was definitely like one of those things where you go, like, you just get this weird feeling inside, and you're like, there's people that, live differently than you do. But you're absolutely right. If you're going to be in this, in this world, and especially if you're going to be looking to try to maximize, say, value, especially in a market like this one, it's been a seller's market for like quite some time now. And maybe for the next little while, maybe we'll slowly enter into more of a buyer's market where you can kind of, find things that don't necessarily have to be, really, really beat up and require a lot of time and effort. And let's be honest, maybe you're the type of person, this is the other piece that I think is really key, and it kind of comes back to our Francois property. Even though we had no intent of, let's say, buying that property, the reality is it's going to be a great property. It's going to bring in income, and it's going to be an easy long-term hold for us. You don't have to necessarily leverage to the max in order to be successful. Maybe you start and you do less leverage on a property. Maybe it's on a nicer property just so you know what you're getting into. And ultimately, like, that's how I started. When I came in, I bought a property that was, priced higher, probably double the price than what I could have gotten into. And I paid all cash for it. So I didn't leverage. I used my home equity line, so I guess I was borrowing in some sense, but interest only as the minimum payment. So I was putting myself in a position where I could feel comfortable and sleep at night. And now that, 10, plus years later, I'm in a place now where I am trying to look for more, specific opportunities. But when you're entering, don't feel like you have to be that person, and don't feel like it has to be the perfect deal. Ultimately, at the end of the day, analyze some deals, but don't overanalyze, because if you find that, you've been doing this for a year, 2 years, 3 years, time's just going by, and sure, you're learning and you will learn along the way, but ultimately you've got to decide at some point, what's my real goal here? And let me just go for that. And let's not worry so much about it being perfect, because you are not going to be perfect. Maximum effort, but not maximum perfection, because that's not really, how it works.
I think that's a good way to, end our update episode on some of the things that we've been shopping for, experiencing, looking at, giving you kind of a big takeaway there, Kyle. So I think that's a great way to end. Hey, everybody, we want to thank you for joining us to listen to our update. And we hope that you leave a 5-star rating and review on your podcast platform, because sharing this, puts it in front of new eyes and also new ears for potential investors, for potential people who are changing their lives, just like you're changing your life through real estate investment, through investing in general. So make sure you follow us on all social media as well, at Invested Teacher. We're on YouTube, Twitter, Instagram, and Facebook.
Hey, friends, remember links, resources, transcripts, and all other goodies can be found at investedteacher.com/episode 42. Again, that's investedteacher.com/episode 42. And any page on our website has links to get in touch with us, whether you're in Windsor, Essex, and you want to get in touch with Mr. Matt Bigley to either list your home or help you find a home. Hey, if you're looking anywhere in Ontario for a refinance, maybe you're looking at renewal time, maybe you just want a little bit of advice as to where you stand now. Are you in a good position? Should you be doing something differently in order to minimize the interest you're paying on your mortgage or in your current, assets? Or whether you should be doing something now, you can get in touch with John. John is a licensed mortgage agent here in Ontario and really specializes in trying to help people really think through things in a more creative fashion.
For sure.
And finally, of course, hey, if you want to reach out to me, if you're curious about how Par Whole Life can be that sort of ground, sort of that solid ground, that foundation to your assets and in a safe way, whether you have a corporate structure or not. If you do have a corporate structure and you haven't gone down this rabbit hole with someone who knows what they're doing, my friend, you are late to the party, and I would love to hand you a nice little invitation to join that party. So head on over to investedteacher.com, reach out to any or all of us, and of course, if you're interested in JV deals, there's links on the website for that too. We can't wait to hang out with you next time.
All right, Invested students, class dismissed. Just as a reminder, the content you heard here today is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice.